Hey everybody, it is technically Wednesday morning on the East Coast. I've got a couple more minutes here before it's Wednesday morning in Las Vegas, but for all intents and purposes, we're going to say it's October 26th, and we're about to open in London. We may not get anything to trade, right? That's always a possibility, especially when, if you look, we've spent more than an hour inside of this purple pivot on NQ. Here, I'll show you on the chart. Everyone knows how to read. So the gap overnight was due to Google earnings. That was somewhat unexpected. I looking at this, it appears it was unexpected. This was the close of the day. They ripped it down at the earnings, and then it settled. And then 2 hours later they opened again. And they opened lower. Came back to this. This is actually so the VWAP that is anchored back at the beginning of the month is down here at 111.91.75. So two standard deviations above that is basically the support that held here. They tested below it, didn't really find any sellers down there, and so they bounced. You can see that that was the same area we were in last night at this time, which is interesting. So you could put a line right here, and we couldn't break that low. They then ripped up, and they are now renegotiating this purple pivot, which is a decreasing range and decreasing volume pivot based on the 30-minute chart. All the purple rectangles on my charts that I share, you'll see they begin with either a green candle followed by a red candle or a red candle followed by a green candle. The second candle has to have smaller volume and smaller range than the first one, and generally it becomes a pivot in the future. It's typically not activated until one side owns the area. So you can see that right away they were negotiating it. You wouldn't use it here at all because no one's owned the area. It looked like if they would have rejected here, then bears would have owned the area. Here they just ripped up. They never came back and activated it, which basically means like retesting it. And then you can see they tried to activate it and then it fell through. So it has not been activated until now, which is interesting. It's kind of a newer pivot. And so it got activated during Globex. You can see it started to act as resistance. But then when they tried to exit, they found buyers. So which is interesting, right? It means that there are either passive buyers on higher time frames that were collecting NQ back here yesterday, and we're just waiting to get refilled again, possibly shorts that were stuck from a few days ago, or it's just new buyers coming in who were looking for a pullback and see this. The responsive buyers, one way or another, we should consider them responsive because they were basically waiting in an area that has recently been supportive. So, but if you look real close, pretty sure. Maybe I mean it's close, but the question is did this one reject off of it, or are we just going back and forth over a small range? Hard to say. So if they just rip up here, I mean, then it's not going to be all that useful unless you want to use it for your retest to get long. We're going to need to get under it and reject it below to really convince me that we're done negotiating the area, just because it hadn't been activated until now, and we just failed to exit it. So you can see it here. Oh, here, let me get rid of this. You can see it here. It's the I guess I didn't put it in the right place. So it was that purple there. So I got to put that in the correct spot. But let's see if it matters. I'm supposed to lock those, and I just forgot. Oh, I think I can undo that. I believe. Nope, not all of them. Just the last one they deleted. Okay, so we'll get out of that. And let me just double check this. It is a high of 495.25 and a low of 493.75. Wait, that can't be right. No, a low of 47950. Okay, so we're gonna fix this. 495, I think I said. 495,525 is the high, and then the low of that larger candle, or the range of the pivot, is 47950. And then we need it to be purple. Wait, I did something wrong there. That's still not right. It is 1-1. Let's see. What am I doing wrong here? Oh my gosh, no, that's not right. And then this one should be 11,479. No, what am I doing wrong? It's late, guys, sorry. Let's see here. Anchors. $11,409. So what am I doing wrong? Is it there? No. My goodness. This is definitely right. And then the low. No, that's the low. Yeah, 11,479.50 is the low. The high is 11,495, 11,490. It was missing the 5. It's like something's not right there. There we go. And then we're going to extend it. And we're going to lock it. Okay. Anyway. Sorry, that's embarrassing. A little dyslexic and some of that. Sometimes when I've got two different numbers I've got to compare, it's not that there's a math problem, it's just that my eyes will miss the obvious stuff. So, we are trying to break out of the purple pivot, and we're testing above these little sideways triangles are the apexes, or also known as power bars. They're basically the pivots. They develop on the algo. They're the only one that has a delayed development, but that's okay. Like, it takes about 2 bars for them to show up on that previous bar, but we use them for trade locations. So for instance, getting just a little bit higher than this, like it's done, and then reversing and closing back down here is typically a short setup, as long as you're not fighting momentum. If it's balanced or if it's bearish, that's a pretty high odds trade. You can see it actually occurred here. And so the entry short is here, and this is for about 15 points usually. Sometimes you'll get more than that. I did lock this, right? Yes. Sometimes you'll get more than that, but you can predictably get 10 to 15 points, risking 15 points. Now here we're 4 minutes into the London Open, and so I don't typically trade, at least in the first couple minutes. If I know what's going on, I'm willing to take a trade after the first, like, let's say 15 minutes. But in this, when all of these new participants just get access to the market, it's really common to get like false signals, and you just don't know what the range is going to be, and so it's really hard to manage risk. But that was a valid setup, and so what I will do is I'll now take note. Basically, is the algo showing me setups that are working, or is the order flow like not ideal, not optimal for the algo? So if that works, it's a sign that the order flow is optimal. Whereas when it triggers and then it doesn't work, it's potentially, it doesn't immediately mean that you can't use the algo, but there's a chance that either volume is too low, speed is too slow, right? Like you're not. It's a high odds trade, so it should work more often than it doesn't. So when they do work, that builds my confidence that I can probably take the next one. But if they're not working, I'm either trading the wrong side of momentum. So in other words, it's too bullish to sell anywhere, or the order flow is not optimal for the algo. And like I said, there's we see that especially like Globex over the summer, for instance, where like things just aren't getting enough volume. There's not enough range. And so you get these signals that don't really make any sense when it comes to like why you would get in. Yet the algo is signaling that there's like a momentum shift or some absorption or whatever, and it's like the it's just not sophisticated enough to identify whether or not it should care about certain like things. It just is always looking for the same basic conditions, right? It doesn't necessarily always adjust to like it doesn't know, for instance, like that the markets are just opening in London right now. Like I need to, as a human, use some discretion and kind of say like, yes, this is usually a short signal, assuming that there's nothing going on. But I know that right before, just before, just after a big shift in participants. So that would be like if there's news or a Fed speaker or a new market opening or a new market closing, anything like that. It's the chances that high probability trade is going to work. It's decreased because the the algo just doesn't know all of the nuances that have to do with whatever is going on. It's not reading economic reports. It's not looking at um, average volume during London Open at this time compared to the last 6 opens, right? It's not that sophisticated. It's just order flow. So it's just comparing what's happening currently to look and see if there's things on the footprint. So it's basically it's looking at this, right? And it's making decisions based on this information and then relative in the bars, and then it's also looking at the DOM for the resting orders, whether or not people are pulling their orders. For instance, is what the pink and the purple is generally showing, is that price is moving due to orders getting pulled on the order book. So those are the kind of things it's looking for, and then it's also looking at structure. So, like I said, for instance, these apex flags, which Simon calls power bars, are the indication that there was a shift in market structure there. So it has nothing to do with time. Remember, it's only price and range, because in our system, time is like there are some things that you want to consider with time, such as what time does London open? Like you have to, that would be important. But when it comes to like you need at least 3 5-minute bars before that. No, like none of our setups really do that. It's the setups are all based on structure and order flow, and primarily like matching order flow with important levels. That's what the majority of our setups are doing, is it's aligning confluence points in location wise price points with order flow that confirms what we would expect to happen there if we're right about direction. So sometimes that means shorting the high of a low volume area and buying the low of the low volume area, right? That would be an example where you have confluence points, and then you would not do it just because price touched the low volume area. We would wait for the signal that there's sellers that are getting more aggressive or buyers that are giving up, such as pulling their orders quickly. So all of these colors and symbols and stuff like that are letting me know about that those conditions existed during that bar when price was trading there. And so you don't actually, to trade with the system, you don't actually have to understand any of this. And you also don't need to know what the stars and the arrows and the diamonds all mean. Like none of those, the action that it's already been programmed by people who do know what they mean, right? And we've already back tested it to show that if you follow the patterns, you do pretty well, and you can improve your performance by being a little bit more discretionary during times like a lot market open, market close, things like that. So the key to actually trading with the algo is to memorize and get confident identifying patterns of signals and in relation to structure, market structure. So there's you basically learn them one at a time, and when you are learning them, you can turn off the other signals that aren't related to that setup, and then just get really good at seeing that one setup. Now I've been doing this for 15 months now, so like I've got a handful of setups I can use, and as a result, I've got a lot of the signals on more than most people do. Like most people are looking at this, like this is Simon's chart, and this is what most people are looking at. It has a lot of the same signals, but it's got some of them missing because I've actually added them. I've added additional ones, like the diamonds and the arrows, with due to new, adding new setups to my system. So these, for instance, the arrows can tell me a location, which in this case is here. And that's a location that if sellers can get the market under here, which they did, and they can hold it, which they didn't, you would be confident that the next market move is going to be lower. Now, sometimes when it gets priced below and then comes back up and tests into it but fails, this can actually be a pretty good short as well, looking for this move. It's not 100% or anything, but it will work often. So seeing the arrow to the left when going in the correct direction as the trade setup says to go, right? Because this is a short signal. The orange is a sign of volume shifting lower, and then you've got the trap trade where you traded behind one of these flags and then turned around and closed a bar bearish. So those are two reasons to get short there. And to add another reason would be we had an arrow to our left, and that arrow produced a bearish bar that closed with its VPOC below the second bar. So I know that's kind of complicated, but you just have to learn this. It's just this pattern, right? It's just arrow at least 2 bars, the last one being at least two bars in the direction of the arrow, with the VPOC, that yellow dash and the yellow line dropping. Once you get that, this next pullback has the potential to take that out. In other words, this low is vulnerable because of that moment. What the arrow's saying, if you're curious, is it's showing a momentum shift based on someone stacking their order. So they were either adding to their order, or they got filled, and they added to their order, or they didn't get filled and price moved away from them, and then they moved their order to chase, right? So conditions like that on the order book will get these arrows, the blue and the yellow. Now what's interesting is we got a blue one shortly thereafter, and so that blue one produced just one more bar in the same direction, so we can mark that right there. And they were unable to get any volume above that. So that is actually bearish as well. And then look, we got another arrow here. So you get them often, and especially during market opens and big moves outside of consolidation, or attempts to get outside of consolidation. You always want to look at the most recent info as the most pertinent info, right? So the last arrow is this one, and that would need to produce a sell bar to be bearish. Otherwise, if it goes higher, what we can say is that 15-10-25 is the level that bulls need to develop above to get a breakout. So it becomes resistance behind it. Because again, there was a seller adding to their order or chasing the book, chasing the market down. And so when you get behind them, now we've done it, right? We've gotten a bar with VPOC behind this bar. See that? This yellow line went higher than the high of this bar, and this bar closed bullish. So we've done it to, first we did it to the short side. They tried to pull back and failed. Now we're trying to go to the upside. And so now we see, so in other words, this is suggesting that the market's actually going higher now because it's broken out of this and it's gone higher than the bar after this blue one with VPOC with volume developing higher. It doesn't have to be immediate. It can be. But what I really want now is for a retrace. Now they just did one here, so we might not get it. But if they wouldn't have done this, what I would expect is a pullback back into this dashed line, or maybe back all the way into the pivot, and that would be a buy. Unfortunately, we got this tail here right after this yellow arrow, so it's kind of unusual for them to do two in a row. But the perfect setup would have been breakout first, then put in this wick. That way you get a really good entry, because the problem is with this setup is you have to put your stop. It's a momentum trade. You have to put your stop underneath support, which is like here or maybe even here. So what you want is a pullback, right? You don't want to buy the breakout up here and then have to put your stop down here, because that's like a 27 point stop. So like, sure, maybe sometimes you'll get 27 points to the upside, but not every time. And when you're wrong, it hurts really bad. And it would take me 3 trades, let's say, mean reversion trades, like regular layups, just to make up for that one big stop. So I wouldn't buy it up here personally. Now, this is the close of the previous day, so Monday's close. And we are rejecting there. So that looks bearish to me. And again, the algo doesn't know. Okay, good. So we got this. So someone is trying to push momentum lower, right? And that makes sense. They got over it. They should have gone higher, and instead they ran into that previous close, and now they're going to try to push momentum lower. I'm not going to short it because we have this buyer who's supporting this area. I would want to wait until this low gets taken out first before I consider shorting. But this will show me how much conviction the buyers have if they can hold now this support. Would be very, very bullish, because they've gotten this guy to show up, and they tried to wreck him, and then they tried to wreck him here, and then they got another seller getting aggressive, adding to their order up here. And so now the question is, what will buyers do? Will they back off and let price go down? Well, then all of a sudden we're not so interested in that buy anymore, because now since it's the most recent one, the most pertinent information is the yellow. Well, that would mean that we're going to buy just as this one confirms momentum has shifted. What we want, if we're bullish, is for this to get beaten, and then so this high here, whatever that is, for bullish we want 21.25. There we go, to get beaten. That's good. Okay, so they beat him. Now we want to put volume above it, which is happening right now. And again, you can see, the market's moving. It's 20 minutes after London open, and we're moving higher up into the gap here. And so you have to kind of stay patient and calm and accept, like I said, I knew initially that we had some signs that it might be getting bullish, but I was going to wait because the first of all, the algo signaled a short that wasn't working, right? That short, and then it turned around and signaled long. And so right away it's like, okay, the London Open is putting in a lot of mixed signals here, so this area is probably not ready yet. I'm not going to commit to one direction or another. And then, like I said, we got all these attempts at momentum shifts over and over again, and the blue one, it succeeded right here, and that was the next sign that the bulls probably have control, and then the bears were unable to get any follow through, which is more evidence that it's bullish. So what we should see now is orange bars and yellow star down and arrow down like this, they shouldn't really produce any follow through if we're right that bulls are in control. And if that's the case, if they print the bearish signal and then they turn right around and give us like one of these, like a white star or a green bar, something bullish, a white diamond would be good. That would be your momentum entry, because the momentum entry to the downside would have been here. You can see that those aren't working. And then the orange bars are almost always good to sell. And even those didn't work here. So now they put in another orange bar with the yellow arrow. So again, we got to see, can they get a bearish close with and then get volume below it. If they can, momentum has successfully shifted. And then we would expect to get short up here. Things change quite a bit, very dynamically. You have to be prepared for right when you thought, okay, it's definitely bullish. If they give you a sign that it's going to be bearish and they can't beat that, it's going to be bearish more often than not. And this is why I need the algo, because there's so many dynamic things to keep track of. If I was trying to read this, I wouldn't be able to keep track of which side is even in control at the moment. Whereas here, I can measure my confidence level based on whether or not these signals are working. And so far, we had the bullish signals working very well, the green bars and the white stars. But you can see that this one, it traded behind and then went, and that's pretty bullish. Whereas all of these are not getting any push to the downside. So should we expect this one to work when the last couple short signals have not really been producing any extensions? We really shouldn't expect it to work. But when it does, we have to respect that we're at least probably going into a sideways period, if not switching directions, especially when there is a seller that supposedly is, according to the algo, is trying to add to their order, or they're chasing down the market like frantically to get to sell out here. Like, if they get some extension after that, you have to respect it. Now, like I said, just like for this one and this one, if instead they test below and then rip beyond them, well, then that's just more evidence that the bears are completely stuck and that bulls are in full control despite the gap down, which again is probably not what most people expect, but you can't trade what you think. You just have to trade what you see. So until they start making shorts, setting up shorts that actually get some follow through, I'm just going to ignore the short signals. And then when they start working, I'm willing to short again. But I would much rather be conservative, miss the first long in London Open, and also miss the first three stops because I decided I didn't want to short, right? Like it's for me, it's a no-brainer to just take the time to figure out who's in control now that we have new participants. And yes, maybe it takes 15 or 20 minutes, and you might not be able to trade during that time, but your confidence in your plan going forward is going to be so much better if you avoid taking those early stops. In my opinion, maybe everyone's a little different, but psychologically, it's so here we go. Confirm bullish, right? So if you're a breakout trader, you could buy this, although your stop has to go under support. So what I want is a pullback. Unfortunately, this one didn't produce much of a pullback. Otherwise, we could have just bought it here. But again, my stop would have to go down here, and I'm not comfortable with that. Now, technically, you could put your stop below this one. You could, right? If you think this is new support, you could do that. So if they get a pullback, you could try to buy it in there. But then if they stop it out, then you have to reevaluate. I would probably put my stop a little bit lower. And so what I'd like to see is for them to print one bearish bar and then to print maybe a purple bar that bounces. That would be perfect for a buy entry. But keep in mind, we are entering that gap, so this could get a little messy. And that, like I said, the algo doesn't know where the gap is. It's just reading order flow. So we need to, and that's what this is the single prints and the gap is this green. So we're already into the single prints that occurred after the open, where we spiked up and then reversed. That's right here, the single prints there from Globex. Um, and it includes the gap all the way up to here is where the it was where the post market level is. What I don't have on here that I should, do I have the low? How do I not have the low in there? Hold on, I'm gonna have to add this. Globex low from yesterday was 11/4/30/25. It's pretty low. It's pretty far away. But if we get down there, I need that on my chart though, because that's an important level. Okay, so we're struggling at that previous high, Monday's high. Now the problem is they the buyers put in an aggressive bar here, meaning that they could get trapped. So we really didn't want to see a star here. We wanted to see something like this, because the star suggests that we have an aggressive player pushing the market up, and that's great if you're at support. But if you're at resistance and then they get under you, you can get severely trapped. Not you, but the buyers can get severely trapped. So we really want to be, if we're gonna buy this, we have to be like aware of like how the market is responding to the fact that we have aggressive buyers at the highs. If they start to increase speed and momentum suddenly increases and volume starts to increase as we drop, it's a sign that the trend is probably the trend up is probably maturing, right? Like it might not be over, but it's getting late with this momentum, and they're going to need to go into two-sided trading before they can get it any higher. I haven't seen any signs of that though, so the only thing keeping me from buying this is the fact that I don't want to put my stop right here. Otherwise, I could just buy this, and I just want to manage risk better. So I would rather have my stop back underneath here, and so I need a pullback that's gentle, like a purple bar, back into this area before I would consider just buying. Otherwise, I need a setup, like a bullish setup. And an example of a bullish setup here would be to come back to this power bar, go just a little bit lower, the apex here, go just a little bit lower, and then bounce. That would be a great setup. Otherwise, make a higher low, like right here, and then print a green bar. That would be great. Yeah, but I'm not gonna blindly buy a dip when I've got an aggressive buyer potentially trapped at the highs. Not because it's never gonna work, but yeah, there's a relatively high chance that if they dip too far, the next bounce gets stuck in the range here. And where would it get stuck? Probably right at that Monday close. So if I did enter, I'd need to be getting 10 points exiting there. So I'd want to get it at like 07 would be the highest I'd probably consider. It's like right there. So that I can take 10 points when we get back to this previous close, and then hold runners in case they continue, but get paid for the risk. And again, if I got in at like 10, I could put my stop at like 99. It'd be pretty comfortable. So we'll see if they set it up. We are sitting right at the gap though. What's ES doing? It's filling right at the gap, but got quite a bit further than NQ did. Yeah, ES is trying to fill the gap. We may just run, and like I said, totally cool with that. A lot of times trend days continue for more than one session. All I care about for trend days is don't get what's the word, like too aggressive counter trend trading, because I used to blow up accounts on trend days just trying to fight it. So as long as I'm not fighting the trend, I am totally cool waiting for the better opportunity. I will be patient and trust that if it is a trend day again, then they're going to give an entry on a pullback, even if it takes me an hour to get a trade. Like that trade is going to have the high win rate, whereas buying this is just going to make me anxious. Then I'm going to take stops,
and then the likelihood that I stay on process for the rest of the trading session decreases. And so that the chance that I actually do take a big loss on that day, like a max loss, would be increased because psychologically I would be aware that I'm not trading optimally, and that is a surefire way to get me to my max loss for the day. But also why I have a max loss for the day, where the I actually I have to set it up for the broker to let me trade again. It physically locks me out of making new orders in the regular account. I can still trade sim, but it will not allow me to put in any new to open any new orders. Um, yeah, because otherwise I'll just like convince myself to take more trades. Um, Now I can turn it off, right? I can just call the broker and tell him to turn it off, but and let me trade again if like there was some sort of very unusual circumstance. But I've never had to do that, and it automatically resets at the next day. So and it lets me back in again. It's just automated. And so if you don't have like that's my risk manager, right? I don't have to pay for it. Like I'm just using my broker as a additional risk management. It also helps me because it automatically flattens positions there as well. So potentially, if I got my internet dropped and I couldn't get on my phone and I couldn't find a way to get out of my position, that max loss is at least going to never be overcome, really, except for maybe a couple ticks for slippage, um, because they will flatten the position once it reaches that and like liquidate me out of it and then lock me out. So even if I can't access the computer, if there's some sort of medical emergency or something, and like my stop failed, I don't know, like if like all sorts of things happened at the same time, max loss I can really take, assuming the broker doesn't have issues, is already determined. Now I have had one time where the broker, actually it was CQG, not the broker, but the routing service went down, and it did not fire. It did not liquidate me like it was supposed to. So that can still happen, but that's a in how many years? 3 years. That's happened once. So I'm trading every day, but it still scared the fuck out of me, and made me uh, think about other ways to further manage risk. But I was literally locked in a position, and even the broker couldn't close it because the problem was is they routed everything through CQG, and CQG was not able to route orders. Now, I did hear some people say that they were able to, um, like, they're like taking CQG to like small claims court and try like with that same day, and maybe that'll work. But thankfully, it wasn't a huge position for me, and it wasn't a big loss, but it sure did shake me psychologically to realize that everything in my account is technically at risk at all times. And that yeah, it has made me realize that I need to keep that account at a size that that's manageable, and that even though I want to build my account as big as possible, and you have these fantasies about like tripling your account size and all that, you need to pull that money out to make it real. Not all of it, but like you need to take withdrawals. Don't just let it sit in the broker if you're like having a amazing month or whatever. Like take a withdrawal. Don't, because what's gonna happen is you're gonna flex your risk management and potentially give back, thinking that like net you're just back to where you were at the beginning of the month or whatever. I'm not saying that's always a bad thing, but like that can be a successful strategy, but you need to do it with a plan. You need to go into it saying, if I get to this point, I'm going to flex my size by X amount for X number of trades and take a shot only on these setups. And then if that shot fails, I go back to my regular size or whatever. Like, you have to do it with a plan. It can't just be impulsive. Like, wow, I made so much last month. You know what? I usually trade 3 contracts, but with the amount I made, I could take this next trade with 6 contracts, and even if I stopped out, I'm still gonna be positive on the month. Let's see if I can double my account. Like, that kind of thinking, if there's not a lot of planning around it, and like you're setting yourself up for massive tilt. At least I was, and I'm just saying that from experience. Like, you think that all you have at risk is what you've already made, but if there is a chance that those decisions can lead you to overtrade, then you have way more at risk than what you have in that trade. I hope that makes sense. It's like I said, it's just the reality of, I mean, anybody who does this, who trades, even professionally, but regularly, we've all dealt with the demon of like that sense that you're in a rush to make money back, and it's really really easy to fall into the trap of I've already lost enough as it is. What's another couple, whatever, like however what your size is, like what's another 2K if I'm already down 5, right? And the truth is like that's a horrible way to look at your account. Like, you're being abusive to your account if you're doing that. So anyway, we are just hanging out here at this previous close and struggling to stay in even back inside of the gap. Now what's funny is ES actually went beyond the half gap, but NQ didn't. So here's ES over here. It's the symbol, and here's the gap. See that? Like the Dalton's gap. And did they get a Dalton's gap fill? They did not. Dalton says that the gap is not at the open and the close. It's at the low and the high. It's the part of the market that didn't have any what's it called? Any prices, any trades at all, right? Zero volume in between those two, and so the gap does not go all the way up to here where the market closed. According to Dalton, the gap goes back to this pullback low. So and if you can see here, they did on ES, they did not close it. So that's concerning for sure. Like that's weird. Now it might mean that they're just gonna pull it back and then squeeze, right? Like they're just leaving a little bit because they know that everyone's already got their stop up there, so they're just like collecting more liquidity up there, knowing that they're eventually gonna breach it. I've definitely seen that play before, so that might be what they're doing here. But if you really have to be aware. If you don't have an algo watching order flow, you really have to be aware of changes in order flow, such as speed and anything that you'd find on a. You need to be really good at reading a footprint, and you need to understand like how things like speed influence and relative speed compared to like absorption and trap traders and stuff like that. You need to understand how that is expected to influence price, and then see if price does what you expect or what the market expects. That's basically all trading really is. And so I'm just having the algo read the footprint for me and signal me when there's like momentum shifts or absorption or aggression or speed changes, right? Those all are coded into just a visual system. And then rather than having to say, okay, I need to see absorption followed by aggression followed by a speed change. Instead of that, I can just say I need to see orange bar followed by star followed by diamond, and cycle like mentally, cognitively, like it's so much easier to just like almost like actively attend to just the signals and the colors and stuff, and be able to like just react than it is for me anyway to look at this and say like, yeah, that should be enough absorption, and that was a pretty aggressive move, like i I don't have any, like I'd have to run in there and get all the numbers and stuff and actually do all the math to know if it's as good as the last time that worked, or as good as how often, like I don't know how often it works when these numbers are the way they are, whereas I know my metrics for the signals that the algo's been trained to look for, the conditions that set off these alerts. I know what the win rates are for those when they're in certain patterns. And so it's just for anybody who struggles with like consistency, basically like being able to only take the trades that you want to take and taking them every time they set up. There is no better way than having an objective visual system that just like basically just shouts at your face that this pattern is happening right now, and it's in your trading plan that you're supposed to take it every time, right? Like that's, if that's the kind of trader you want to be, which is the kind of trader I want to be, there's no, in my opinion, there's no better way. It doesn't have to be this algo, but you need some sort of objective way to like mitigate all of that impulsiveness and indecision and other things that lead to inconsistency. Like I need to use technology as like my handicap, right? This is like my assistive device, right? This is the it's like what's it called? Like Stephen Hawking had like an assistive communication device where he could basically talk through a computer program, right? This is just the market talking through the computer program so that I can understand it in a language that makes sense to me, because this language is too much for me to process. And I realize that there's a lot of signals, but I don't care about the individual signals. I'm waiting for specific scenarios and patterns to develop at location. And when they happen, I can take a trade. And if they don't happen, or if they happen at the wrong location, I can't take a trade. And then there's discretion in there, but based on the things that the algo's not looking at. But it is greatly simplified and de-stressed the trading like day for me. It's no longer very stressful to just run the program. It's still exciting, but it's like I just have to wait and see if they can print an orange bar, I don't have to sit there like as this is happening and try to say like, I don't know, is this good enough? Like there's some at this price, but I think we have to get below this. No, maybe it's this. I mean, we did get below that, like you can make all these exceptions, and my brain just can't handle all those decisions. For me personally, it's like it has to be fucking black and white. It's either a trade or it's not. And that way, when I backtest and sort of say like, should I keep taking this trade? Is it working or not? I don't have to try to interpret this. I can just say, what if I just sold every orange bar? How'd I be doing? Well, I'd be sucking pretty bad right now, right? What if I just bought every green bar? How'd I be doing? I'd be loving life right now, right? And it's like right away, it's just like, okay, well then don't be short. Like you don't have to be long because you still have to manage risk, but right away I know, don't fight this. Now that could change, right? That could certainly change if they can get under this again. But for the time being, I mean, the price isn't really doing anything. But if it keeps doing what it's doing, it's going to keep bouncing. And so the aggressive trades are the short side right now. The more passive trades can be the longs. The longs can be nice and passive. I can identify locations I want to join the trend, wait for price to return there. It's pretty straightforward. And like I said, I don't have to stress about, oh, I didn't get a trade yet and I'm not in the market. Like, there's no, I know what I have to see for me to get long or short, and I know that I need to risk off of this area if I want to be long. So now it's just a question of how much do you want to risk? Do you want to take 2 micros and buy now and put your stop down here, or do you want to, wait for a more significant pullback and see if you can get 15 points of risk and take an NQ contract or 2? So now we can come back to where this started. We had a beautiful setup at the bottom with a trap short with momentum shift, the purple, followed by a speed bar and a trap trader candle. That was just beautiful. I wish I was here to trade. I was at Costco. So far, if we just turned around right now suddenly, the 61.8% retracement down here at 11,473 would be the very last spot I'd be willing to take a long. If they lose that, it happens to be the low. But if they lose that, I know for sure this trend is over. Now you can also, if you want to look for more entries, you can find a more recent low and measure it this way. And now you can say, well, it would be very natural now to come back to this price, which is 11,500. So if I can get a pullback to 11,500 and they give me a trade signal, I can still get long, unless I've seen a momentum shift, which I have not seen yet. That's for sure. So we did get a green bar here while I was explaining that. So this would be a very aggressive trade, but it's technically okay as long as you're bullish to basically buy every green bar. It's way better if the green bar is in contact with either this bottom channel or this gray line. That's best case scenario. And then in my opinion, it must be at least 38.2% from the high for me to even think about buying it on a trend day. If it's a trend day, sometimes they only pull back 38.2. Now in this case, I don't think they did. Let me erase this and see. Depends where you draw it from. Let's draw it. If I draw it from here, they did. And that pullback was right at the bottom of the single prints and right at today's opening range low. So the location's there. You have the confluence of locations. You just needed that signal that buyers were still interested. And you can see that we had those aggressive buyers that made me nervous were in this bar. They tried to pull back, couldn't do it, made a higher low, shifted volume up. It's aggressive, but if you have the risk reward and you can size it appropriately, you can do it. Again, the problem for me is that my stop would have to go like here at like 11, let's say, and my entry would have to be in this bar somewhere under 28. So it could be a pretty significant stop. It's not horrendous, but it's a relatively significant stop unless you can get a pullback, like buying it right where it was just now. Like buying it down here where it just bounced to, like 23, that's not bad. That's like a 12-point stop. I would only need to get 12 points for that to pay off more often than not. And like I said, with the algo's help, I know that a green bar, especially when it's to the right of yellow arrows like this, is, as long as it's bullish, is usually good to go. So for instance, if this would have been a green bar, it would have been just fine. And then this one's the arrow over here, green bar right here. So that one becomes better too. Now that was 2 minutes or 3 minutes after the open, so I wasn't going to take that. But you know, once you understand that setup, and you can just say, I need a yellow arrow that points to a green bar. If you don't know anything else, like that's pretty helpful. Now, if it's a downtrend, it would be a blue arrow pointing to an orange bar. So you see this one did not line up. See that? So that's no good. Let's see if we have one up here. Here we go. Blue lined up with orange. It goes lower. Blue lined up with orange. It goes lower. 2 opportunities to take it there, right? So that's how that setup, that's how that pattern works. And the different patterns we call setups. So that made that green bar easier to buy, but like I need the risk reward to be right. And I'm not thrilled about buying a breakout live. You know, I'm going to be a little more conservative maybe than I normally would be, simply because I'm like cognizant of the fact that I don't want to look like I don't know what I'm doing. So that's, yeah, that's another reason. Let's see. Fill up the vape tonight with, this is Redwood Chem Sherbet. Sorry, Chem Sorbet is what's on the menu tonight. It's a pretty sweet, fruity smelling hybrid. Very fruity. Blueberry, for sure, which is actually one of my favorite old school strains. And the Chem Dog in here, or it might be Chem Sis, but I think it's Chem Dog based on the smell. It's very subtle. It almost just adds like almost like a what is it called? Like an artificial fruit flavor, right? Like it reminds me of like a very, very cheap sorbet. Like what you'd expect this to smell when like you smell the Walmart version of like berry sorbet. That's pretty much what it smells like. And tastes pretty awesome in the vape. So location wise, hopefully this makes sense that like we were getting resistance here at these single prints. And they couldn't, you can see this yellow line is the VPOC of the individual bar. So it's where the majority of the volume is in that range bar. And so as they came up here on that Renko bar and they tested in here, they couldn't put any volume above into the single prints. And so we got a significant retrace. They spiked up and failed. But then you can see that VPOC just can't develop lower. It can't go any lower than the previous high. It's making higher highs and higher lows and eventually breaks in there. So right here, it was actually this one, but any of these like peaks that come up here and break into like over resistance and they put volume high up in the bar, you know at that point that it should be bullish. You just want the right entry. And in this case, you had to be pretty aggressive. Either buying as it drops, which is pretty tricky, especially after an arrow, or buying basically the high up here. And that is definitely a weak point in my trading. Is buying highs and selling in the hole. It's really tough for me as a long time swing trader to see that as any more than a scalp. So this is a new signal I'm playing with. This big red thing. It's an absorption signal basically, and so there's a little red dash up there, and that's where the absorption is. So it happened way at the top. So I believe the way this is going to work is it's not going to be an immediate sell, but it's going to be basically if buyers can't hold that level, if they go any higher and they lose it, it's going to end up being resistance. So it's a slower developing trade. It's not a sell signal because you'll get absorption when momentum's increasing. You'll often get some absorption because there's so much buying up there. They'll get a tiny little pullback and then rip higher. So you don't want to see it as bearish all the time. In fact, it's usually not bearish as long as they don't develop volume below it. One setup that I'm playing with is if it comes down with a purple bar and then comes right back up with a green bar, they seem to work. They seem to go higher after that. So red arrow down, purple bar, green bar. I haven't back tested it, but I've seen it work. So I don't really want to take it with real money, but I'm definitely watching for that. I don't know the other patterns other than identifying that level where there was absorption can become resistance later on if they lose it. But usually these pullbacks get bought up when a trend is this strong. I rarely see them at the very high. And if anything, it makes me want to wait to short until they can spike up here, and then we see what they do up here. Because then if they can break down underneath this, I can be confident to short it. One way to think about this is you can look at the last wave up on the algo, and you can measure the volume profile of just that wave. And you'll find that the VPOC is this pink line right here. So all the volume is right down at that previous day's close, that Monday close, or regular trading hour close. That's where all the volume was. So it would make sense for the market to try to go back there to confirm that buyers are still waiting underneath there. And like I said, that with this volume shifting back and forth like this, see how the VPOC does like a W? It makes perfect sense that you'd get most of the volume in that situation to be right where that pink line is. And then, like I said, the first time they got volume above it, they pulled down, they tried to get volume below it, they spiked up aggressively, they tried to get volume below it, spiked up aggressively, and then just floated up from there, right? So does it make sense to get maybe bearish candle here, purple bar here, aggressive buyer? Totally. That's the kind of thing you see on continuation. You can see ES also got the absorption. So I don't know. Wait. Yeah. I don't know how reliable they are on ES. I haven't studied it much. But somehow I already had a level there. Exactly there. Why was 38.45 marked? Wow, it was a up absorption before the gap. That's fascinating. So buyers absorbed sellers there, and now sellers absorb buyers in the same exact spot. Well, that's interesting for sure. I don't know how often that happens. So we are in those single prints, but we've now wait, did we close the gap? On NQ we closed the gap. Yes, both ES and NQ, Dalton's gap fill has been completed. So if we were just coming up here to make sure that sellers were just still in the gap, we could sell off. But note that you have single prints significantly higher because this drop was so fast. See, this drop was so quick that you have two sets of singles. You have singles from here. So on this chart, what it looks like is you have singles from here to here, and then you have another set of singles from here all the way down to here, right? Those are all single prints where the market only moved through that during this drop. It only moved through those prints, through those prices, in a single 30-minute period. And so those see this one too, it was only in a single 30-minute period. Now here we got a retrace, and so we started filling those single prints, that first set of single prints. And a lot of times, once you break into the single prints, especially if you can retest, you will the market will try to get to the other side, and often will close those single prints. The gap technically had already been filled, but there's single prints all the way up to this fib level 11,559. So we could just see a aggressive, impulsive move straight to it, straight to this even. This is these are not separated. There's a separation in here, 11,559. $25. So the single prints pause there for a minute. So see how these red arrows do not signal to sell? That's not how they work. But like I said, what you can do is drop that level and then observe it later. And if we lose it and they put volume down here, it can reject. But clearly the only way to be a part of this was to get long pre-London or at London Open, or to aggressively buy the high. That's really the only way you'd be in this. And that's just not my style. That's not the kind of trading I usually do. But I know better than to short when it does this. So and like I said, having two sessions back to back that are trend days, it's not that unusual. So the expectation should always be that there's just still whatever the conditions were before, that those conditions continue. All right, so we hit this consolidation period that occurred post market. I would expect, because it's an anomaly on the profile, it would look funny on the profile if you look. We're in after hours. That's right. So you won't see it. I'd have to turn on the after hours, but you'd see that there's this little blip of volume there from 59 to 94, and then there's a little bit of single prints above that. So let's see if they trap them up here. I won't short it, but if they can trap some buyers up here, like if we get a white star again, and then they roll it over and they break under 11,540, then we can look for shorts. Otherwise, it's just wait, because there's no way I'm buying the breakout. Now, if they pull back they get under this and they save it, I will buy right there. And that's totally cool. And keep in mind, that means I chose not to buy this or buy this, and I'm choosing to buy higher, and I'd be comfortable with that because my risk management would be easy in this situation. I would put it underneath that low. Whereas back here, I was buying the high, and I said that I don't know how many times we're going to have to go back and forth in here, and they could easily take out one of these lows only to spring back up. And so that becomes a much harder trade to execute without taking a ton of risk. And I'm just not interested in putting my money on the line if I don't have great risk reward and a clear edge. I would literally just rather sit here and like wait. and then when it happens, just be sure to be in it. I think people think that like they're always supposed to be in the market just because it's moving, and the idea that the market's going up and you're not in it, you don't have a way to get in it, like is really distressing for a lot of people, and you have to get over that. Like I've been sitting here for an hour, and while I had the opportunity to get long, I chose not to take those trades because they were too aggressive. And you have to just be okay with that choice, right? You make the choice for a reason, and you just have to accept that that's how it's going. I don't know how else to explain it. Like you have to make a decision, and then you have to learn to live with that decision. If you can't do that when you're not in the market, how are you going to feel when you get in a situation where you're losing? I mean, yeah, it's... Oops, did I move that? Sorry, guys. I think I moved this. Let me fix this. We want to see that. There we go. Sorry about that. So they are trying to reject this area. See that? Based on this consolidation candle. Am I going to short it? Not aggressively. But if they can give up 11,540, we can see how the market's going to respond to that, and then a trade might present itself. I need the high odds trades before I'm going to do anything. We just didn't have it here at the highs. Yes, it signaled, but it was an aggressive trade. And yeah, well, it was, if you're going to be aggressive, this is where to do it when the trend is intact and direction is clear, momentum is strong. You know, then you can, well, this was London Open, but you can buy this if you're aggressive. And I mean, it does work, right? Like, and as I said, the problem was risk, is that I thought you'd have to put your stop like under here. So like, let's say, I think I said like 99 would be the safest, but let's say I put it here at 09, maybe. You'd be getting in at 28. So let's say 08, just to make it easier. So 20 point stop, right? So I'd have to get 48 to get 1-to-1, and it did. So if I looked at this on a back test, the question of, did I have 1-to-1 risk reward in this exact outcome? I did. And so if I consider this a pretty normal outcome, then that aggressive long probably makes sense. As long as you're okay with losing that 20 points. And I just wasn't. I wasn't ready to give up 20 points on the chance that I might get 20 without a high odds setup. Because like I said, the odds of this happening, I don't think it's 70%. I think it's definitely over 30%. But in my experience, it's you get 10 points probably 50% of the time. But how often do you get 20? Like, I think it's less than 40, honestly. If I had to guess, I don't know. But since I don't know and I didn't have confidence that I knew, I skipped the trade and I just learned from it. And then you can look and say, like, well, was there some other supporting evidence? Well, we were at a good location. We had the arrows both pointing to the green bar. So perhaps in the future, if I want to take an aggressive trade, I perhaps want to wait for those things to line up, because there's a chance that the likelihood of the 20-point move is higher when those conditions are there. The only way to know that is to actually go back and back test it. And to do that, you need the signals already determined, right? So I can do it. It's just a matter of taking the time to do it. Again, this one, there was absorption. They absorbed the buyers. They got a reaction from that. Tried to trade higher. They did put volume above it, which looks pretty bullish, but they ran into that anomaly and they're trying to reject out of it. If they can drop underneath this, we're either going to see immediate buying. If we see responsive buying, we can add, we can join in there and put our stop underneath it. Or if there's no responsive buying and instead we see an increase in speed and momentum to the downside, then pullbacks can get sold most likely. So as you can see, I'm already thinking about what might happen next. I'm not spending a lot of, I don't have to really process what's happening now. That's not requiring a lot of processing. I can just look at it and I can see if they close it bullish, it's going to be an aggressive bullish star. If they close it bearish, it's going to be a momentum shift, which is the yellow arrow. And now I just wait to see what happens and start planning ahead for, if I get the yellow arrow, what would it mean if we continued lower? What would it mean if we suddenly reversed? What would, right? Like I can start thinking about all the different possibilities that could happen there rather than having to wonder, is this a momentum shift or not? Right? It is, if they get that arrow. There we go. And a volume shift. So volume shift and momentum shift. It would be a aggressive short if you were bearish. The location's right. So if you're bearish, this is the first opportunity that looks like a decent short. I generally do not take that aggressive short when we're looking like a trend day. When we open, drive higher, can't pull back more than 32.8% or 38.2%, right? I don't usually touch that first one. Once it works, I start paying attention. So from here now, 38.2 would be right in this neutral area above 26. So basically 526 is the first place that I even want to think about getting long. Otherwise, it's not much of a pullback. So green bars that show up here, I'm not all that interested in. But if green bars show up down here, I will be interested. Now we are returning to that level. Deleted my line. Where they had that absorption. They don't have to immediately reject there. But we want to be observing here how they handle this. Because bears were absorbing buyers there on the way up. And so now that we've returned to it, if those sellers are trapped and anxious to exit their short, they're getting an opportunity to get out break even. And if there's responsive buyers waiting there, it's a sign that that absorption was just due to an increase in like just buyers following through. Like sellers came into the market, but it didn't matter. Buyers were there. They were responding to that selling. So this arrow down, producing a pivot that we bounce off of, is definitely not bearish. Even if they went just a little bit lower and got a response, it would also be a sign that if you would have taken that short, that you want to be taking profits, because that's not how reversals look. If this is going to reverse, it's not going to do this. Right? It'll get under here, it'll increase speed, it'll come back up, it'll reject, and then go lower. That's with reverses. So we're watching closely to see if they can close. There we go. So they got the close. Now they need volume below it. So this purple bar, if it's a purple bar, we're going to be looking for buys coming off of it. If it's a stone colored bearish bar, we're going to be looking for potentially shorts on a retrace, which would be aggressive still, but would work more often than not. Otherwise, they just rip it higher, and you again are stuck in that situation where you have to ask yourself, am I willing to put my stop here? And if they stop me out, what would I do? Would I be willing to take it a second time if it sets up again? Would I know that it's no longer bullish? You'd have to have all that figured out. And so that when they turn it around, you already know what your decision has to be. And that way it's not going to be based on like feel or impulse. Like I'm not a big proponent of like intuitive trading. I will say some people can do it really well. And if you can do it really well, keep doing it, because that's whatever you're doing, it's working. But most of us can't do it. So that if it's purple when it closes, again, it doesn't matter what it is until it closes. But if it closes as that purple bar, I'm going to be looking for buys. If they can just flip it over into one candle. If it closes back up at 11,552 and it's a bullish bar, I'll probably just let it slide, because it's hard. Like I said, if I was going to be aggressive, I probably should have been aggressive back here, not after they fill the gap. So yeah, but if they go purple bar and then they immediately bounce with like a green bar, that's worth a try. But then if that fails, I'm not buying anymore. Because not up here. Then it's at least sideways, if not bearish. So, and again, I know that because of this arrow, which indicates that this level is going to be an important pivot to determine who's in control of this area. And that anybody who can get volume on one side or the other has the higher likelihood of pushing the market that direction in the next rotation. So, and again, I'm monitoring speed as well, and like tempo of the momentum. Oh, this stretched. Okay, so we got the purple bar. Let's see if we can get a buy. So this started right here, and it went all the way up. Oops, wrong tool. DVP started right here. Yeah, so the POC is down at that previous close. Almost exactly, if not exactly. 11,517.75. It's technically not super bearish unless they can get under that. And like I said, if I get the opportunity to buy this, I will. Oh, wait, I gotta have it right. No, not 10. Okay, there we go. It's gotta be a real setup, though. Can't just be, I feel like getting long. But if they can give me a green bar would be best, or a star here would be up, a star up would be okay. A diamond up would be okay. It's got to be a white diamond, though, not the purple one. The purple pink diamond just tells me there's a volume anomaly, and that's not what I want to be looking for in a pullback. That's what you want to be looking for at support. Now, if they close another bearish candle, especially if it's not purple, then this isn't bullish anymore. The momentum has shifted lower. If it's another purple candle, great. I can still get an opportunity to buy it. Now we wait. The location makes sense for a reversal. And again, I should take note that the aggressive short did work, whereas before they were not working. So the likelihood that we've gone into some sort of a sideways move, or that we're actually distributing here again, increased probability. Note that we got a perfect touch on the ES of this fib here, 38, 50, 50, like a perfect touch to the tick. That's definitely bearish. So if you're a location trader, we've reached the location that you'd expect them to reject. I use location to help me identify where to trade. I don't use location really for executing and timing trades. I leave that up to the algo. I need both. I need it to be at the location, and I need order flow. See how they're trying to save this level because they know it's important. My algo's not the only one looking at this. Again, we need a star or a green bar or a white diamond, otherwise there's nothing for me to do. But tell me it's not hard. Like, the problem with shorting this, for me, is it's really tough to hold the position when, like, this bar tries to reject back up. Like, I would have had to take profits already. I could have runners, but it's super uncomfortable when they jack it back up again to leave your stop at the high, which is what you're supposed to do. And so what I end up doing is I suddenly see this go and I exit, and then it rolls over, and I realize, this is what I was talking about today on Twitter, is that I realized that by doing that, by like trying to like short circuit the trade plan by like guessing that this is going to be one of the ones that doesn't work, I miss out on all of the times that it does work. And therefore, the aggressive trade is no longer, the win rate is not as good as I think, and the risk reward is not as good as I think, because I only get the 10 points even when it works. And so that's an area that I'm working on, is just making sure that I'm only taking trades that I can actually, that I'm capable, and that I have the skill to actually follow through and trade it optimally. If I can't trade it optimally, I'm either not going to take the trade, which is the preferred way to do it, or if I think I might be able to trade it optimally, but I'm not confident, I can take it with smaller size. Because you really can't get better at something until you practice doing it. But the big revelation for me is to realize that like the realization is you should only be taking those aggressive trades if you're willing to see them through. Taking them and then exiting early because you got a little chunk and you don't trust it's going to work is just a bad habit. That's all it is. It's not trading your system. It's trying to get the wins without taking any of the stops. And that's just not a thing. If you don't take any of the stops by exiting early, it means you also don't get any of the big trades. And that trade-off is not very good. In the long run, if it's a good trade that you should be taking, it's because when it works better more often than it fails. I'm not taking these trades to get 10 points. I'd have to be taking these trades because sometimes I get 50. But if I take it and every time I exit at 10 points, but I tell myself that I can keep taking the trade because it might give me 50, well, that doesn't make sense because I'm not in the market when it gives me 50. I don't right? If you're not holding it for 50, then it doesn't give you 50. It goes to 50 and it just doesn't pay you because you already got out. So until I build that skill to be able to confidently hold those runners, I'm just not taking that trade. Okay, let's see if they can close this bullish and give me a entry signal.
Order
Oops,
canceled.
I accidentally put in an order on accident. Still flat.
Order filled.
Okay, so we got it. We got the star we were looking for. We gotta quickly place our stop, which goes below this. So 30 makes sense. And then I will aggressively take profits as we go back to the highs in chunks. Back to the booty range level. We really want this to fill quickly. The faster this goes, the better. So I'm going to try to get 57 for my first fill. Still with full size here, but I want to try to take some of that profit before we have to break into. So to find 57, what I'm doing is I'm looking at this, where we spiked up, right? And then really the VPOC here, 56, is potentially a problem area, but I want to get 10 points. So it's either 10 points or wherever the resistance might be to take that first profit. And then I will take my next one just above Hive Day, because if it breaks into here, it's usually going to break up to like 74. So, I think getting 64 there is okay. And then you got to hold the runners in case we go to 11,600 or something crazy like that, right? What's the point of taking this late aggressive momentum trade if you're not going to take advantage of it? It's always a good sign though when it kind of works right away, but you really want that fill, that first 10-point fill to happen on the first push. You really don't want it to go 8 points and then pull back and then like wonder if it's going to come back up, because it usually won't. You really want it to get there the first try. It doesn't mean it can't work, it's just the likelihood is lower. Like I want this bar to print bullish, obviously, but like it's the difference between the ones that print bullish here and work versus the ones that print bearish here and work is pretty big. Not big enough to like exit the trade or anything. I'm not just gonna bail if it prints bearish. Like my stop stays down here, but yeah, like I can look back at the last 50 times that I took this trade that set up just like this, and the times that this one closes bearish, it maybe continues on 30% of the time, whereas the time that it prints bullish and immediately fills my first take profit, it continues higher and breaks high day like plus 50% of the time, 50% plus. Like that sense that whoever was selling here had one opportunity to take a profit and never again got the opportunity to really get like that entry, that exit again. That is a sign of really strong bullish momentum. But if they come back to that 39.75 and give it up, even though it won't stop me out right away, the likelihood that I will get stopped out goes way higher. And if I get stopped, it's fine. It's just a stop, right? Like I took an aggressive trade and sometimes they're going to stop. It was an on-process trade. So the only thing I could do better is be willing to trade London Open, which I'm not, or be willing to buy the high of day, which I wasn't. This was the first opportunity where I could get long on process without having to buy the high of day. So I took it. there's nothing for me to do now. The decision's already been made. The only thing to do is like monitor your like body, right, and your mind, and like practice like living with the consequences of your decisions, and be aware. You don't have to like be critical of yourself, but you want to be aware of like where you're at stress wise, and whether or not you've got like feelings, right? Like you want to be real with yourself, because if you start feeling stressed about a position, like, and that stress increases to a certain amount, it will end up causing you to make decisions that aren't very good. Like you'll make mistakes due to your stress level increasing. And the best way to keep that from happening is to, or at least to decrease it. No one can completely omit those errors, but the best way to temper that is to stay aware of your emotional state. So when you do get slightly frustrated or stressed or whatever, you can kind of step away and say, okay, that stung a little bit more than I would have expected. Here, let's pause and see if I made the right decision. Let's find another couple days that were similar to this and see if that same kind of setup showed up, and let's see if it worked then. If it worked then and it didn't today, then it's like, well, you probably did fine. It just didn't, the results just didn't work your way. And then you just move on. But if you go back and you find out that what you thought was a high probability setup actually doesn't work that often, or is often in this condition, that's actually great news because it means now you know what to do to improve your future odds by just not taking that trade anymore in those conditions. But oftentimes the result is you take a break, you go back in, you look for similar days, and most of the time the trades actually worked, and it was just variance that caused it not to work today. But so that's what I'll do if, like I said, if I'm ever in a trade like this, and if I start to feel stressed about it, you let the trade finish, right? You stay long, you don't touch it until your levels get hit. Like you don't let your stress level influence your trade that you already like, because once you're in that trade, you already made that decision. There's nothing you don't want to fuck with that. As long, assuming you have a process that you follow to set the trade and set the stop and set the targets, that unless there's new market generated information, you really don't want to touch it. Okay, let's see if we can get filled here. We want 57 for the first one, preferably.
I would like 57, please. Amazing how when it goes slow that it just feels like it's not even moving. Especially when you're in a trade, it's just like, how am I still in this trade? Now I do know my metrics that the majority of my biggest winning trades, I hit my first target within a minute. So the longer I sit here, the higher the likelihood that the trade's actually going to fail. And that awareness of those metrics can sometimes cause me to make mistakes. But not knowing them would be worse, so you just deal. Like I said, if this doesn't work out, it's because we're running into resistance and on yes, and then on Q. We're running into resistance here too. So if it doesn't work, it's the location was not ideal.
And again, in case anyone didn't understand or missed why I'm taking some profits off at 57, it's because there's quite a few times where it doesn't continue higher, and I want to make sure that when it looks like it's working but then ends up rolling over it, that I don't take a full stop on that. So this way I take some profit and I basically pay for some of the risk of taking the trade. So the times when it just rolls over and I lose a full stack, that those are decreased. And then, like I said, my next take profit is just above the high by like no more than like 3 or 4 points, in case they spike up there, take liquidity, and roll it over. And then the other ones, you just leave it. So see how this, well, never mind. The VPOC got above the voodoo range level here. It really should work.
Order canceled.
All right, cool. So the order getting canceled is the stop order, the bracket order, and my there's like a little like waterfall sound. That is the order getting, the limit order getting hit. So we are now down to 5 contracts. And I will take another one at 64. Again, I'm long from 47. And then I will keep 2 as long as they let me. The bell just means we're moving further than you'd expect in balance. This is clearly not balanced, so that's why. Okay, here's the high day. Let's see if we get a nice little spike here. I will chase
Order canceled.
Okay, cool. So got filled on that one. So we're up a little more than $200 in this. What's it called? The Apex account. And then the rest is runners. So now where I differ from a lot of other traders, I've been trained to leave my stop where it is on the runners. And if I'm not comfortable with that for any reason, the only solution is to get out of the trade entirely. Unless we've had a pullback that got supported producing higher low than my stop, then I can move it up here. But until we get that pullback, that stop must stay down here, which feels like a pretty big loss, especially for this trailing drawdown account. But we did a lot of work over the last few weeks. I would say we, I mean the team, looking at like how we can improve our numbers. And one of the biggest things we came up with was that a lot of times we're taking a lot of effort to get the entry right and to make sure that we're paying for our risk by taking profits early. But many of us are not getting the extensions because we're not willing to put anything at risk for, out of fear that it's going to roll back and stop us out, and then like give back not only like the whatever the runners were worth, but also it's as if you got it's as if you got long at the high of day with those trailing drawdowns when it comes to how far you can draw down. So the solution, initially, my solution was take 10 points, take 15 points, take 25 points, and be done. And I thought that would work pretty well. And it did work for a bit. But psychologically, it was really tough to watch trades that I was in and had no reason to get out of go 100 points. And I ended up trading poorly after missing those moves. So after talking to my coach, he basically said, you just, like any other account, you just need to decide what you're willing to risk, and you just need to size appropriately so that those runners, even if it not only gives back what you lose on the runners, but it also, the trailing drawdown makes it as if you are long right here to wherever it stops out, and that's how much it decreases your trailing drawdown ability, like your max loss. You just have to pick an amount that is manageable. And so for me, 2 contracts is just an amount that I'm willing to give back. Not only the contracts themselves, but also whatever profit I could have gotten. I'm okay with them taking my trailing drawdown down slightly, because if I'm normally trading like 8+ contracts, 2 contracts getting a full stop and even having 2 contracts push my trailing drawdown a little bit further, it's just not gonna be enough to significantly influence whether or not I pass or fail, as long as I'm only doing it during times where there's momentum in the market, like a trend day. So when there's momentum, I'm holding the runners. When it's a consolidation, there's other rules for which trades I can hold runners with, and for which trades I need to take all my profit off at like 2 times the range and stuff. Like I've got basically just objective rules for like, in this scenario, this is what you do. In this scenario, this is what you do. And that way, while I won't catch every single breakout and extension, obviously nobody's going to catch them all. I'm hoping that I will balance out some of my like full or runners getting stopped
Order
out.
canceled.
Oh, wait, what? Hold on. It got me out of the position. Did it? Oh my god. Hold on. Something's not configured right. It got me out of the position. Hold on. I have this figured out. I have this auto bracket set up. Fuck. Move to break even after 80 ticks of profit. That's a mistake. I don't know how that got turned back on. I thought I fixed this. So that's not right. We do not want it to move stop to break even. Okay. Like I said, I had this issue a couple weeks ago. Fuck, that's upsetting. So I could just buy back with 2 and just be long again. But I think instead I'll just take the trade and just like let it go, because I don't really want to have the extra entry to explain when I review this. Because I definitely don't have an entry here. So it's kind of a bad habit to just like get in the market because you want to be long. But like I said, it must have come back to our entry. Plus, like, I think I did like entry plus 4 points or something. I thought I fixed that and turned it off, but I had to re-download NinjaTrader, and it's possible that the template that I saved and reloaded on here might have had that break-even trail checked. So like I say, it's not that it wasn't a good decision. It's just irritating that wasn't my plan. After I just got done talking about how important it is for me to practice holding runners, and then it auto gets me out when it hits the break even. It's just like, wait, I just said I wasn't going to do that. So, but that's the risk of automating some of these things, is that you could make mistakes on that. It might not be a mistake on the results of this specific trade, right? But what I'm trying to explain is that there are more times that it will continue and potentially pay me a lot more than 20 points than there are that just go 20 points and then roll over in these conditions. And the one exception to that, the one thing that makes me think that might not be the case, is the location. You can see that this location makes sense for a reversal after this big drop, right? So if you were gonna break a rule or put in a rule that says that, like, if we reject at resistance, I'm allowed to take profits. But if that was the case, I should have been taking profits a little bit higher. I didn't have to wait for break even then. And I'm just trying to be like, the one place I can improve with my consistency is to be sure that I'm doing what I plan to do. Because really nothing tilts me more than saying I'm going to do something and then emotionally changing my mind. No matter what the outcomes are, like that triggers me big time. Now in this case, it wasn't a decision; it was an automated just result because I had set that up wrong. It wasn't actually I didn't actually click any buttons. It just I had set up the brackets to trail to break even if I made 80 ticks of profit, which is like I said, I thought I fixed that, and I think I did for the. Let me make sure I did. I should check these other. Make sure these are fixed. I might have fixed it. See, I fixed it on ES and I didn't fix it on MQ. Yep. And I fixed it on ES and NQ and MES. I didn't fix it on MNQ. So since I was trading 8 MNQs, I hadn't fixed that. Okay, let me. So I fixed it, but I didn't save it as the template. So there we go, saved. So by saving the settings after making that adjustment, it should remember now. But before, I think the time that I switched it on MNQ, either I never switched it on MNQ or I switched it on MNQ and I didn't save it. So a volume shift up here technically would give me an opportunity to get back in. It's not a great trade at this point because of that rejection, but it's technically valid. You can see we got this absorption point right here. They tried to get under it and immediately rejected. And now once again, they're trying to get under it. So if they immediately reject and go back higher, it's technically a long. It's just hard to take at this location, but I probably should take it. You know what? I'll take it with the 2 that I would have. If they trigger, I will take this with just 2 contracts to get back into the runners I was supposed to have because like I said, I didn't make any mental mistakes there, and so I want to reward myself for the intention to stay long. So if they trigger again here, whereas normally I'd just skip it, I will put the 2 back on right around just a little bit higher than the spot that I would have been holding the runners for earlier. I do need it to trigger though. It needs to turn green and close bullish. I could technically get in anywhere in that range, so I could wait for it to pull back a bit, but then I'm risking missing the trade. So I'm going to take 2 at the when they close green. I'm going to take 2, and then I could potentially take another 2 or 3 if they pull back. Or they just won't trigger me in, that's fine too. You know, they put a really divergent wave up at the top. Wait, hold on. Divergent wave at the top. Did they develop volume below this? Not yet. Close. All the way at the highs. Fuck. Okay. So yeah. I'll explain it after. Hold on. Looks like they're gonna trigger it.
Order filled.
No, not order filled. I want it to be a stop order. Fuck. I was trying to put a stop order in at 52.25. If they immediately go up there, I can just leave it. If there's any sign of aggression to the sell side, I gotta drop this and I gotta re-enter. So that was a misclick. I put it. It's frustrating. I forget that clicking anywhere on there just is a market order. It's not a stop order anymore. I believe I can make it so that the middlemost button is a stop order, but on the rhythmic, there we go. Okay, we're good. On the rhythmic DOM, it's just different. 11.5 than the Ninja, and I do a little bit of both. Wait, 5:38. It's a small stop if I do take it. So I'll put my stop at 537. And I realize that it could come all the way back to 11,528 and bounce, and that's okay. I just want to be back in that position with those two contracts that I had as runners in case we just continue to go higher. Oh, fuck. I got to move these. I don't want this to take me out if it goes 10 points. I want it to stay with the runners. Like, I don't know, 87, something like that. 90. Not that I think it's actually going to go that high, but if it did, I'd be thrilled to get out. So I am long again, just with a smaller size. They didn't pull back to give me an opportunity to buy it. I mean, they did, but oh, I guess I could have done that. I could have bought on that pullback. No. I had to wait till it turned green. It would only be if it pulls back now. I just got in early. That's right. Anticipating the entry is never a good idea. You shouldn't do it purposefully. That was a misclick. The benefit of having a lower average is not worth the risk of it not triggering. And if you're coached by Simon and you do that, he will help you with some tough love. Let's just say it that way. Because it's a leak he had for a long time, and he still occasionally falls back into that pattern, that habit. And so it triggers him big time when people do that, because he knows how dangerous it is to your account. So I'm not taking profits at 10 points like I normally would, because I didn't take a full size trade. I only took 2 contracts. So it's just a small, like, re-entry with those runners, as if I'd never exited that trade, because like I said, it was set up. The brackets were set up to trail to break even, and I didn't know it. Even though it did technically give me a valid re-entry, I could have taken this with 8, but I already took this aggressive buy, and this one's even more aggressive, so I didn't feel like giving back all my gains if I'm wrong, especially since the location's not ideal. Every bone in my body just wants to take 10 points here, which probably means it's going to go a lot higher. Because the very best paying trades are the ones that are really uncomfortable to hold. And if we do break through this area, we really could get to 11,600 for reals. And just these runners, if we did that, if we got to 11,600 or even 11,590, just these 2 runners will pay me more, twice as much as what the 8 contracts paid me for that earlier trade, since I ended up getting out 2 of them at break even, 3 at 10 points and 3 at 15 points. The 2 contracts alone, going 50 points or even 40 points, would actually be almost twice as much. Not quite, but almost twice as much. Which is nuts, right? And then I would be back up at break even at a high water mark of the day. And so I'm that, which is always what you want. You want to be ending days at high water mark so that you're not hurting your trailing drawdown. And then you want your drawdowns to all happen at once, and to be not so severe, to get out of them quickly. That's the only way to qualify these Apex accounts. It is not easy. It's not easy. It's super easy to blow them up, even with a good system. It's really easy to blow them up. So no shame if you've blown up a prop account evaluation. It's like we've all done it multiple times. Because even with a great system, those rules are so strict that if you just, all it takes is taking maybe 2 trades outside of the system, what we call off process, 2 trades basically, and you could be headed for Tilt City. And with the size that we're trading to try to get these things qualified in 30 days so that you don't have to pay as much, we're really not setting ourselves up to be able to take a ton of stops. So the result is you either qualify it in 30 to 60 days or you blow it up and then you've got to reload it. But multiple people in the room using the exact same processes Simon does have gotten it funded. Simon's qualified multiple accounts. I think he's got 250K ones that he's doing right now as a small account challenge. So yeah, it's definitely doable. They can be beat. But notice that like none of my decisions are based on like Google's earnings or the manufacturing numbers or the news, right? I don't care about any of that because it's all the market generated information is right here. And that's the reaction to all that stuff, which is really all that matters. In my opinion, that's what I care about. My eyes are feeling a little tired. It's pretty late here, so I'll probably wait until this one is done, and then I'm probably going to call it a night. I'll be back to trade tomorrow, but I will be in the Trade and Perform room. If you guys want to join us in the Trade and Perform room, you can email Simon for a free week in the trading room. Email my coach Simon. It's trade, the letter N, word perform @gmail.com. Mention and then tell him you follow Ben. Give you a free pass to the room. And you can see how we work together to trade with this algo. Simon's significantly better trader than I am. I am just learning this. He's been doing it for years and years and years. He's still in a hedge fund. He's extremely successful and is a great coach. And just a good guy, to be honest. He's got a couple kids and committed to helping people learn how to trade. So we're sitting right at that level. See that? So this is either going to have to break out through this or else it's just going to get stuck here. Make sure there's no economic stuff coming up at this hour. No, nothing until trade balance at 8:30. Okay. Oh, inventories. Bank of Canada rate statement. Pretty. Tomorrow does not have a lot going on And if I had to guess what's going to happen tomorrow, I would say we're going to renegotiate yesterday's range. That would be the expectation. Like some sort of an inside day. If you include the overnight. Not inside necessarily yesterday's regular trading hours, but it could be. But I think, yeah, somewhere between Monday night's Globex range and yesterday's regular trading hours range. So from 11,440 to 11,700, let's say on on NQ, and then on ES it would be they made a lower low there, 3790 up to the high, which was 3875, let's say, rounding slightly. So I know that's a huge range, right? That's 1, 2, 3.5 voodoo ranges, so that would make sense regardless of the direction, but that would be very normal to spend some time in there. And again, if I get stopped out here, it's no big deal. I'll probably be done just because it's late and I'm tired and it's been going on for a while. But if it stops out, like that's cool. Like okay, it was the momentum slowed down and I took an aggressive trade, and sometimes those get stopped, right? I'd still be up on the session because I got that first trade with full size, and the decisions were good, and the opportunities were actually slim. There was the only really trade that I missed would have been this aggressive short, or else I would have had to trade this aggressive long, which was at the high of day, or trade London Open, which I'm not going to do. And I had many opportunities to lose had I taken any of those shorts. So, or just traded anywhere I wasn't supposed to. So to be up on the session, even if I have a 50-50 win rate, that's fine. Like the conditions were not ideal. This is basically just trending with momentum. And while this system does work with the trend days, it works way better when it's balanced. Way better. But because it is a mean reversion strategy, we're looking for pullbacks to buy, pullbacks to sell, and, stops to get hunted, and we're hunting the stops mostly. We're doing the hunting. So, as long as you can survive the trend days, the real money is made on the volatile days. The problem with the trend days isn't the fact that it goes one direction. It's that the pullbacks just aren't very significant. And so, like, on this time frame, my best case scenario, and I got it, was from here to here, and then it's from, like, here to here, So, like, getting this to extend, it just doesn't always do it. Sometimes you just get stuck, right? And if you don't identify that the momentum is gone and they start going sideways back and forth, you end up missing all sorts of 10-point trades. But then if you start taking profits at 10 points and they go 80, that's even worse. So it's not easy. And as much as you want to say that you just want to be long when it starts, like, it's just not reasonable to hold yourself to those expectations, that you're going to be confident that you know the direction, you're going to be able to trade profitably before the market open and hold through the first, like, pullback during the market open when it gets kind of volatile and fast. Like, there aren't a lot of traders who can do that consistently. Some can, but most probably shouldn't trade at least the first 15 minutes. And if you didn't trade the first 15 minutes, your first opportunity was really here. And that was basically the high of the day. to get along. Even if you got this pullback, which I considered taking, but it wasn't committed enough. It worked, right? Well, but you have to, if you only knew this, you have to be confident that this momentum is going to actually increase, because if it just continues at this pace, it's going to be hard to hold a breakout. Still long. I did have the opportunity to take profits and I didn't do it, but again, that was the plan. So that purple diamond outside the bar is a sign that there's a volume anomaly that happened in that bar. So either, in this case, it appears the anomaly is that it had very high volume. So a lot of trades went off in this range. Generally, that means that the high and the low are going to get taken out, because they put all these traders put stops up here, and the market, if it can, is going to go take those stops. Of course, if that can't happen, it means momentum has shifted, because the market like feeds on those stops. But once again, there's nothing to do because I'm already in the trade, and I know that there's no decisions to be made. So the only thing to do again is just to be aware of how I'm feeling about the trade and whether or not I'm feeling stressed or frustrated or anxious, and then just either journal about it or determine whether or not that is a feeling that is justified. And in this case, I feel totally relaxed about, even if I get stopped out and I give back a portion of my win from earlier. I knew it was an aggressive trade. I took it with smaller size. It was after a technical glitch. I mean, all in all, I don't think I could have really done it better, assuming that I didn't fix that initial tech problem. And the results of that wouldn't have really been anything different. It's just, what matters to me is not results of this trade. It's what, if I did this over and over again, would I be profitable or not at the end? The string of trades over time. Because you need a process that you can do over and over and over again the same, and that you'll make money as long as you keep doing that. That's what you want. And we're not gonna move the stop. We're not gonna try to save the trade. We're not gonna do anything. And I've already decided that if I got stopped out, that I'm not gonna take it again, because first of all, I'm tired, but also these two pivots are so close together that if you were gonna take it again, you'd have to wait, really, in my opinion, for this one to get taken out. And if you did that, then we're trading underneath this arrow, which is actually bearish. So you'd be better off, if that happens, if it does trade down here, you'd be better off shorting it on a retrace. So there's really no trade for me if this gets stopped out, which is another reason I'm gonna go to bed if that happens. Of course, if it continues higher, I could be up for a while because I don't know how long it's going to take to continue higher. So for now, we just hold off and see what happens. Since there's nothing for me to do, let me run to the restroom real quick in case this does go back. I'll leave it on. I will be right back. If it stops me out, I'll tell you when we get back. But you know the actual stop is at 38, I believe.
All right, looks like I was stopped on that small trade. So, and they put purple bar. That can be another. If this is a bearish bar, then it's definitely done for now. So I do believe I'm still up on the day. Let me double check that. I'm up $98. How do I get this up here? Up $98, which is fine. I mean, for two trades, that's okay. Especially when one was a stop, right? So they got two bearish bars, but they were both purple. So technically, they have not developed any volume down below this green line. They need a bearish bar that's not purple. If that happens, 11.5, 21.75, then pullback should be shorted. Not by me, I'm going to bed, but just so you know, let's just see what they do with this. This is basically the last chance they have to save it would be to take it back right now. But then even if they pulled back a little bit, it would be bearish. So one bar and it's over. But you can see how if you're going to buy these aggressive longs and you don't wait for a trap, yeah, like one of them's going to fail, right? And so there's a lot of ways to do it, but the easiest way I have is to start with big size and then lower size as you get more aggressive. And that way, the one that stops is smaller size than the ones that you won. There we go. Okay, so it is bearish. So now what we would want, if I was going to continue to trade, would be a retrace of some sort, followed by an orange bar or a star down. So we'd see either an aggressive seller come in the market or a volume shift to the downside after a slight retrace, preferably. You can also take a closer look at the high. Remember, I mentioned it was a divergent high. The volume was very low compared to the previous one. And we're now developing volume below that level. And the wave off the high had its volume point of control way at the highs, which already made this buy a little bit suspicious because there's a good chance that this high volume node are trap traders. And you can see that's exactly what happened. They got 9 points up there. I saw it happening on another screen on the footprint, but I decided I was going to hold it and did, but I really wanted to release it as it was dropping out of there because it took out, just watching the, not the footprint, the profile, watching the volume profile, it rejected right out of that high volume node, and it was tempting just to like let it go, but I had already made a decision of how I was going to deal with it, and I'm practicing that consistency of just following through with what I plan, and so I did that well. And I am totally happy with my results, considering not because they're so big or anything, but because they come from staying on process. So I didn't get overly aggressive when I wasn't comfortable with it. I didn't short this even though I really wanted to, but I told myself I wouldn't take the first short, even if it worked, and I'd be okay, and I'd continue to long until they stopped working because the momentum was to the upside. I knew we were coming into a location, so that was important. So it would have been okay to miss this trade, especially with the VPOC up here. I think the only thing I could have done better is skip this one, and maybe not skip this one. But again, like I'm nitpicking because there's situations where this one fails and you never even see this one, So but I do wonder the times I skip this. It's possible that it makes more sense to skip this. But if this continues on, then it gets harder and harder and harder to make good decisions because you keep on missing trades. So, yeah, once I had a winning trade, I just agreed that I would take smaller size on the next one and continue to take them. I assumed that one of them was going to get stopped out. I thought that there was a chance we might get one more. But had I picked one that I shouldn't have taken, it's this one because of the location and the divergent wave up. So that's that. I hope it's helpful. Like I said, we'd love to see you in the room if you want to learn more about trading with the algo. In the room, you're watching Simon's chart, which looks like this. And we've got a Slack channel where everyone kind of shares what they're doing. People ask questions. Simon calls out trades that he's doing, gives us some coaching pre-market, gives us the levels, and kind of makes sure that everybody's staying safe out there, and helps lead by example.
And if you guys want to see how that works, we'd love to have you. So give Simon an email if you'd like at tradenperform@gmail.com. That's with a letter N, like I typed in the chat. And yeah, other than that, I will see you guys next time I do a stream. Maybe tomorrow night. We'll see. Hope this has been entertaining, if not educational. Like I said, if I was going to continue to trade this, I would wait for a retrace, try to short it out of the 11,550 area, and I would stop buying at this point. Even if they set up here, I would not buy that. I would short if it came back up here, and see if we can't get some distribution. Otherwise, just typical balance day makes a lot of sense, in which case I should be having a pretty good day during the regular trading hours. But to do that, I need to sleep. So